Why don't we just take a quick temperature check, I guess? How are retail traders doing this week compared to, not this week, excuse me, this year compared to the S&P?
No, absolutely. They're doing pretty great. I think Main Street is leading Wall Street right now. Just recently, just this week, I think based on our estimations, we see that retail investors have pulled ahead in the aggregate. When we look at the performance of their portfolio, they've just pulled ahead of the Nasdaq. So just slightly ahead of QQQ in terms of performance and doing about 3 to 4% points better than SPY. So clearly it's been a good year for retail investors. This is the second time since the start of our data in 2014 that they have performed better than the Nasdaq. Obviously, the year is not over yet. And 2024 being the only year where they've outperformed the Nasdaq for a full year. So far, they're feeling pretty good.
All right, let's talk about how they're doing it. I'm looking at some of their top buys over the last 10 days. NVIDIA, Tesla, AMD, Palantir, and Amazon. Those mega cap tech names that really dominate the major indices. So what are they doing that's different than the institutional crowd to get this outperformance?
Sure. Those names that you have on the screen, those are what I call the dominant fives in terms of what the stocks that typically receive flows on a day-to-day basis, no matter what. But then recently, over the last month and a half, there's been definitely a shift down the risk curve where retail investors have focused really on two themes, kind of like the tech AI and the tech crypto. So the intersection of these smaller sub-themes within the whole tech universe, that's what's really has helped their portfolio perform well. And in July especially, these names, as we saw, they've ripped. Many of these names have done really well. And part of the reason is because on the other side of the trade, hedge funds were short. So that massive pile-in from in these names, in the sectors from retail investors has caused what you call a short squeeze.
You showed us a chart. We're going to show the audience this chart in just a second. It shows retail traders, their buys actually kind of lagging some of the trends that we've seen post-COVID. And I think that's really interesting because post-COVID is also post the Reddit rebellion. It's kind of that kind of shift when it comes to retail investors. So what trend are we seeing here that's, obviously it's different. The orange line's 2025, the blue one's 2021 to 2024. You say it's lagging, and this may be showing the sign of a slowdown in retail investor buying. What are you seeing here? Just kind of clarify this for us.
Yeah, of course. So we're touching on the topic of seasonality. Normally, what you see strong buying at the beginning of the year. You tend to see a bit of a slowdown around tax season as investors typically focus on their liabilities and tax obligations. Tend to see a pickup in the summer, in the early part of summer, and then flows tend to slow down in the latter part of the year. There's holidays, there's travel. Investing is a form of discretionary spending. So retail investors tend to somehow shift a bit towards the holiday gift spending and so forth. This year is a bit different because obviously we've had that big dip, that correction in April, which proved to be an amazing opportunity for retail investors. And that's why you've seen that seasonality shift a bit this year versus the post-COVID averages. Now we've seen it recovered, just typical in line with the seasonality has just been a bit lagged. And so not really a concern, but probably one of the dynamics that if we were to see a replay of basically the history post-COVID, we are basically entering a window where seasonality tends to slow down a bit. So retail investors will still continue to participate, but they'll lift the foot off the pedal a bit.